You are listening to chartingwealth.com's comprehensive review and forecast for the week beginning Monday, the 18th of June, 2018. Our book is for sale. It's in its third printing. If you don't have Charting Your Way to Wealth, you can order it today. Top right-hand side of your screen is a video. Please hit that. It will take you to the video. There are links there where you can purchase the book. You can learn more about it, of course. Also, you can go to our website, chartingwealth.com, and under the comprehensive review and forecast that's uploaded there, you'll see links under everything that's published at our website, all of our daily reviews and our comprehensive review and forecast. And if you're getting our emails of the daily reviews and comprehensive review and forecast, you'll also see links to be able to purchase the book. Same thing at our YouTube channel. And please make sure that you subscribe to our daily market reviews along with the comprehensive review and forecast that comes with it. Just sign up there at chartingwealth.com and also subscribe to our YouTube channel. My friends, thanks so much for being with us. Let's jump into these charts. We see, and again, remember, it was Triple Witching Friday. And what did we have happen? Well, we expected a lot of volatility in the market. We see that both the S&P 500 and the Qs and gold, the Qs, of course, the Nasdaq 100 and gold down, bonds up just a little bit. Let's first jump into the S&P 500 as we always do on the weekly chart. We see that we have 2 weeks of nice up movement following the weekly vertical crossover going up that occurred back on the week ending the 1st of June. So we're into 2 weeks of up movement, looking nice. Green open box candles. Price movement is above the weekly trend line at this point. Stair steps heading up on the derivative oscillator, price percent oscillator, as we said, heading up. As we look at the 2-day chart, what do we see? Some warning signs. We were talking about this over the last couple of days. We see that the price percent oscillator has gone flat, derivative oscillator losing momentum. We see this latest 2-day candle is a red spinning top. And again, what does that mean? Well, it means indecision tending down. It's almost a doji. It has punched through the 2-day trend line, still well above the weekly trend line. And of course, as we zoom in a little closer to the action, remember when we talked about on the 14th how we had that crossover going down in the morning, urge you to consider taking your profit, and it's been a beautiful profit from the jumping in point as far as our Heikin Ashi candlesticks go, somewhere around 173, 174, all the way up to a high of 179.48. Not bad in about a week, not even a week and a half hardly. So again, quite beautiful. Then things started crossing over, going down. Of course, you had a little bit of a chance to jump out of that on the day on Thursday, and then a boom down on Friday morning, a little bit of a recovery on Friday afternoon, punching through the 2-day trend line. What does this mean? Well, it doesn't mean the play's necessarily over. The 2-day and the weekly are still heading up. You can see if the 4-hour will recover, if it crosses back over going up, as we can see a typical crossover. Those you're not familiar with it, that happened in the afternoon on Friday the 1st. When you see that happen again, of course, that could be your jumping in point if the 2-day and the weekly are still headed up. You want to know more about how we make these calls and our 2 primary methods of entering trades. That's a weekly vertical crossover, then a pullback on the 4-hour, and a cross back over going in the same direction as the 2-day and the weekly. You find all that spelled out in English in our book, Charting Your Way to Wealth. And again, you can find links at the website to purchase that book. You need it, and you also get to support the channel by purchasing it. Back to the weekly chart, we see that we had a weekly vertical crossover going up all the way back on the 25th, the week ending the 25th of May, and this is our 3rd week of nice up movement on the Nasdaq 100. Quite beautiful. The stair steps going up on the derivative oscillator, price percent oscillator heading up at an even stronger angle. And we look at the 2-day chart. What do we see? Still moving up, not flat like the S&P 500. The price percent oscillator still going up, derivative oscillator gaining energy. We have a nice green open box candle heading up. Price movement well above the 2-day and the weekly. And we go to the 4-hour chart. What do we see? Well, we talked about what to look for, and we did see a bit of a pullback. Now, the derivative oscillator had been gaining energy at the end of the day. We saw a pullback in the morning, and then we saw a crossover going down on both the derivative oscillator and the price percent oscillator in the afternoon. However, the doji ended up being sort of a green spinning top. Again, means indecision, tending down, not nearly as big a warning sign as we saw on the S&P, not nearly as big a drop, a bit of recovery in the afternoon after some drop in the morning. Again, the Q's down only about half at 0.33% of what the S&P was at 0.61%. So again, sure, you can pull yourself out at this point in time, but we've really been dragging along the red signal line this whole time over the last several days since things started doing that back on June the 13th. So again, not as many alarms going off as the S&P. If you stayed in the Qs, just again, watch things Monday morning. It does look like things have topped off. There's some energy loss, but again, remember, it was triple witching Friday. Lots of volatility, crazy things happening there anyway with all the expirations. So we'll see how the markets recover on Monday, if indeed they do, and we'll see what happens. That's where we are on the Qs. Let's go to 20-year bonds. The only thing up for the day, and just barely 0.02%. Now remember, we had the weekly vertical crossover going up back on May the 25th, and we saw the following week ending June the 25th being a big up week. Then things really petered out. We saw that we had a doji that following week, and tending down. It was a red doji, but the price percent oscillator continued to gain momentum, and the derivative oscillator started stair-stepping up. So what do we see at the end of this week? We have a green spinning top, price movement above the weekly and the 2-day. Now we look at the 2-day chart. We can see that the derivative oscillator is continuing to lose momentum, but the price percent oscillator is kinked up, and we have a nice green open box candle. Like we said, price movements above the 2-day and the weekly. And again, we're seeing some positive signs. Of course, the 2-day and the weekly are in confirmed up moves. So what's going on the 4-hour? Well, we had that crossover, did we not, in the afternoon on Thursday? And of course, we had movement up in the morning on Friday and a bit of a pullback in the afternoon. Again, we see the stair steps heading up on the derivative oscillator, price percent oscillator still heading up. So keep your eye on things. If you decided to jump into an up trade on TLT, we'll continue to watch and see how that happens. And again, we did have a lot of volatility as expected. So again, on an options expiration triple witching, you can expect some of that to occur. So again, not necessarily accurate going forward, but we'll take what we can get, and that's where we are on 20-year bonds. Lastly, we will go to gold. Gold down the most of anything for the day, 1.65%. Now remember, gold is in a confirmed down move and has been since mid-March. It crossed over going down, and then of course the following 4 or 5 weeks was up, and then gold really started moving down on the 27th of April. That has been going down since then, confirmed down move on the weekly chart. And we see the derivative oscillator that had been losing some downward momentum gain it for the week, and the price percent oscillator heading down. What's up with the 2-day chart? Well, it managed this latest one, particularly with the down moves on Friday. We actually saw a crossover on that 2-day chart heading down at the end of the day. What does that mean? Well, that means that we are primed now for shorting gold. And again, all this comes with a bit of a caveat. Why? Because of the options expiration Friday, that triple witching. So again, some caveats there. We want to see how things look, of course, come Monday. We saw at the same time with all that strong down move in the morning on the 4-hour chart, that's what ended up causing that crossover going down on the 2-day. Now, of course, we'll wait for a pullback on the 4-hour before jumping into a down trade. You may have had folks who wanted to jump in the afternoon after that first candle when it looked like the 2-day was crossing over, going down with it. That's not the orthodox way that we do things. But again, we do encourage you to experiment and keep your notes in your trader journal. Remember, use your trade worksheet every single time that you do a trade. It helps you come up with the reasons you're getting in, the reasons you're staying in, the reasons you're getting out, and it gives you a record that you can learn from. Same with your weekly market worksheet and your daily market worksheet. Of course, those are all available if you order your trader journal from us. We also provide them free for you online. Just hit the link and it'll give you a free PDF. So if you'd like to have the spiral bound 3-month edition we have, you can sure order those. And again, you'll find them at the website under each day's daily market review. There's a link there for you. And there's also a video that explains how those are set up. And we also have teaching videos on how to fill out the daily, the weekly, and the trader worksheets. You can find those under training at chartingwealth.com. We always love to hear from you, my friends. God bless. All the best from the whole team here at Charting Wealth World Headquarters.